All right, welcome back, colleagues. So we are progressing where we had left off before the Zoom session ended. Now, I was explaining about the different types of auditors, what differentiates them is normally their focus area. That's what differentiates.
Okay, I just have a question.
Please go
Remember
ahead.
you said you have some footnotes for all the different auditors.
Correct.
I also can see it on my side. When you send out the notes, will it have the footnotes that you wrote as well?
Yes, it does. Especially the PowerPoint presentation. That's the one that actually showed. Let me try
Okay.
to. Okay. I don't know if you can now see it.
Oh yes. Okay.
Yeah. So these are the footnotes that I'm referring to.
Okay.
So you notice, excuse me, for the interest of space, I could not put this in the slideshow directly. So I had to put it under the footnotes so that you can be able to read it together
Okay.
with the presentation. But on the PDF, excuse me, PDF version, you will discover that you will not be able to see those footnotes. I don't know why. For some reason, it's not showing. But nonetheless, if you are to open the PowerPoint presentation, you'll be able to see the footnotes. Hence, I decided to share both the PDF version to the notes as well as the PowerPoint presentation.
Okay.
Yeah. All right. Perfect. So that was to explain the different types of auditors. Now the question which could come into your mind would be then, so what is that aspect of these auditors that is common amongst them? In other words, what is that characteristic element that is common amongst all these auditors that I've explained to you? So the common characteristic that is common amongst them is actually the fact that auditors have to be independent, or rather, let me put it this way. The common characteristic of auditors is independency. So if you're a registered external auditor, your audit opinion has to be an independent audit opinion on the annual financial statements of the organization or of the audit client in question. Same thing with you as an internal auditor. If you are assigned to a specific audit assignment, you have to give an independent opinion. Normally, especially if you are assigned to perform a specific audit, let's say it's a compliance audit. At the end of the audit, you have to give an audit conclusion normally, or a recommendation, if I would put it that way, in form of a finding. So your recommendation, or your opinion rather, it has to be expressed from an independent point of view. Now, there are several things that would help you to be able to determine if an auditor is independent or not. Right. One of the things that helps us to know whether an auditor is independent, number one, it's the organizational structure, how the auditor fits in organizational structure. Suppose in the context of internal auditors, if you are working as an internal auditor, normally you are actually an employee of the organization that you're going to be auditing specific assignments within that organization. So you'll be an employee. So now your organizational status, or rather how you fit in within the organizational structure, is one of the elements that determines your independence as an auditor. Whereas with the context of registered auditors or external auditors, as it were, the term external means they are not employees of the organization, but they are independent parties. In other words, external parties that would actually be hired as auditors to come and audit the annual financial statements of the company in question, or the client in question, as in their perspective, right? With government auditors, some of them, they would work as employees normally of the government, or they could be independent of the government arm. So it would obviously come through the Auditor General. Forensic auditors, normally they are independent of the organization. They are not, they do not normally work as employees of the organization. So hence, if we are suspecting fraud, we look for fraud investigators outside of the organization. Special purpose auditors is the same story, right? they will also be hired outside of the organization. So that element is one of the things that determines whether or not that particular type of an auditor is independent in regards to performing of their duties and responsibilities to the client, right? So without appropriate independency, it's impossible for the auditor to be able to achieve their objective. If the auditor's independency is being compromised, it would ultimately result in the audit itself being worthless to the user, because then if I know that you as an auditor, you are not independent, and you express an audit opinion or a recommendation for me to follow, I cannot be fully relying on your recommendation because of your questionable independence as an auditor. So hence, the audit itself, under such circumstances, it will be of no value to me as the user. So it's very important that all types of auditors, regardless of what category or class of auditors they fall under, they have to be independent. So that is the one key common characteristics that is common among auditors. It's independence. Now let's move forward. Now, why do organizations need auditors, particularly the registered auditors in this case? Right. So number one reason is to allow a separation or a split between ownership and management. So ownership, we are talking of shareholders here. Management, these are the directors of the organization. So it allows for a separation, all right, between ownership and management. Now, if we are looking at it in the context of where, there's a public company or a state-owned company that has to be audited, under normal circumstances, let me rather refer back to the public company, because if it's a state-owned company, normally it's owned by the government. They are the major shareholders. But in the context of a public company that issues shares to the public, right, it would have shareholders. Now, you can have a shareholder who does not necessarily work in the company as the board of directors membership or even as part of management. But so under such circumstances, how would that person be able to rely in investing their money in that organization? The only way they can be able to rely in investing of their money in the organization, that is if they have somebody that comes in, who is independent of the organization, to express, okay, the credibility of the financial reports generated by that organization, so that he or she, I'm talking of the shareholder now, can be able to then make an informed decision concerning their investment in the organization. So auditors are there to ensure or to allow a split between ownership and management. So the ownership, they're interested in knowing what management has done or what management is presenting to them, whether it can be something that can be relied or trusted in, right? So auditors, they are there to help the ownership, or rather the shareholders, to make such an informed decision. Number two, auditors are there to inspire confidence in presented information. What is that presented information? In the context of registered auditors, the information here we are looking at it to be financial information. Not only that, we are there to ensure appropriate accountability. We are there to ensure appropriate accountability. So for instance, you can have directors reporting that the company is very profitable, but when we as auditors come into the organization to audit the annual financial statements, we then maybe discover that in actual fact, what has been presented in the annual financial statements is not true. In other words, there's fraudulent financial reporting. So guess what? Somebody has to be held accountable in that circumstance. So how would we be able to hold somebody accountable unless we have evidence that seems to suggest that this person has done something wrong? It can only happen if we have actually conducted an audit. And that's one of the reasons that actually defines our course of existence as auditors. We ensure that appropriate accountability is taken concerning the presented financial information given to the user, right? So these are the three important reasons why auditors exist, in particular registered auditors for that matter. Now, the auditor, so now we're going to just look at the specific theories as they relate to business, auditing, and the profession, right? Now, you know, when we are looking at the person of an auditor, who an auditor is, and what an auditor does, there are certain principles that governs your functionalities, that governs your actions, your activities as an auditor, whether, I mean, let me rather put it this way, throughout the entire audit process stages, right? So there are certain principles that have to govern your actions, that have to govern functionalities, things, activities that you would perform, right? And that's what we call fundamental ethical principles. Fundamental ethical principles. So there are fundamental ethical principles that we as auditors are expected to observe. And it's part and parcel of the things that ensures our independency in the course of performing our duties. Now, independence is common to all assurance engagements, but it's not the only essential characteristic. And that's where ethical principles comes in now, all right? Now, the International Federation of Accountants, which is normally abbreviated IFAC, lays down fundamental ethical principles, which all auditors are expected to observe. In particular, here we're referring to registered auditors, right? So there are certain ethical principles we are supposed to observe. In the context of an exam, you'd normally, you know, in the case of, in the context of the case study scenario that will be given to you, you know, you can be able to tell that, okay, here there are certain ethical principles that have been violated. It could be by a director in the company that you are auditing. It could be as a result of certain actions or events that transpired that, you know, implicates the management within that organization, right? Or it could also be certain events or actions or conditions, rather, that you have entered into with the audit client that could compromise your ethical principles as an auditor. So now what the examiner could ask you would be to identify the ethical principles that have been violated and explain how these principles have been violated with evidence given in the case study scenario. So how can you be able to explain the violations unless you understand the principles themselves? And that's where ethical principles becomes handy, right? So I'm gonna take you through that just now. So you discover again, on the next slide, I've given you the outline of the fundamental ethical principles of an auditor, which is outlined as objectivity, integrity, confidentiality, professional behavior, and professional competency and due care. These are the 5 important fundamental ethical principles of a registered auditor. We are expected to be objective in the course of performing our audit engagements. We are expected to conduct the audits with highest level of integrity. In other words, we should be trustworthy. We must be honest. We must be straightforward in how we do our things, or how we perform our responsibilities in the process of an audit engagement. We have to observe confidentiality principle, which deals with information. So there's certain information that will be given to you in the process of auditing a particular company. Such information is not to be exposed in the hands of wrong parties or in the hands of unauthorized parties. This principle of confidentiality is one principle that requires you as an auditor to be prudent in the use of the information that you will be receiving from the audit client when you're performing an audit to that particular client. Professional behavior, obviously, this has to do with you being required to comply with laws, regulations, as well as to avoid situations, or should I say, to avoid circumstances that could discredit the audit profession itself. Because what happens if you're not observing the professional behavior principle, it means your actions as an auditor, they are not aligning to the principles of the profession, the audit profession itself. And when that happens, it discredits the profession itself. People now begin to lose trust in auditors, right? So we have to always ensure that we observe this particular principle. Now, then there's what we call professional competency and due care. With professional competency and due care, it deals with three things. It deals with your skill set as an auditor. Skill is something that is attained over time, being in the fraternity or being within the profession, right? Then the second thing, still under professional competence and due care, is knowledge. Knowledge is acquired over time as well, and it also goes it also deals rather with your academic build up as an auditor. We always have to ensure that we increase our knowledge. And thirdly, so I said skill, knowledge, and experience. So the third one is experience. And experience is something obviously that is attained over time. So when we are saying observe professional competency and due care, we are saying maintain a certain level of skill, or rather advance your level of skill, advance your level of knowledge, advance your experience level as an auditor, right? So these are the important 5 ethical principles. And like I said, in a context of an exam scenario, or in a context of a year test, they would ask you to identify the principles, the ethical principles that has been violated by the auditor, during the engagement with the audit client, right? Now, let's talk about assurance. Now, we've done explaining about the auditor and then those objectives concerning the auditor. I want to discuss about assurance as well as non-assurance engagements. Now, with assurance engagement, by the way, there's a difference between assurance engagements and non-assurance engagements. And all of these, they can be requested of us as auditors. And when I'm saying as auditors here, I'm referring to registered auditors or external auditors. We can be required by the board of a particular audit client to perform assurance engagements on their behalf, or we can be required to perform non-assurance engagements. But we need to be able to be in a place where we understand what are these engagements, what is the difference between these this set of engagements. So let's start off with assurance engagements. So this one, assurance engagement, this really refers to a type of an engagement where an auditor is expected to give the client a degree of assurance that the information that was subject to the audit is free of material misstatements. Notice what is happening. With an assurance engagement, we are expected to express a certain level of assurance. In other words, a certain level of or a degree of confidence to the user. To say, look, you can rely on this information that has been given, or you cannot necessarily rely on the information that is being given by management to you. That's assurance engagement for you. Therefore, an assurance engagement is one in which the registered auditor expresses a conclusion designed to enhance the degree of confidence of the intended users, other than the responsible party. So who is the core focus, or rather, who is the individuals at interest here during the course of an audit? It is actually the user, right? It is actually the user of the information, right? Okay. I think in the next 10 minutes, we'll be done. In the next 10 minutes, we will be done. Because I just wanted to...
Okay, thank you. I was just checking.
Thank you so much. I wanted to just finish off some of these principles. But I think for the interest of time, we might not be able to finish, because I wanted to keep this particular engagement or session for today a little bit shorter. So what I would do, I think for today, we can leave it here on assurance and non-assurance engagements. And what we would do on our next session, we will pick it up from here. And I will also introduce some aspects to do with part number 2 of this particular lecture. So lecture 1 is divided into 3 parts. So what I've just covered so far is just really aspects of part 1. And then so in the next lesson that we're going to have, we'll be just proceeding from here. And hopefully the others will be in class. I'm going to have another session with you on Sunday.
All right. And then I just wanted to ask you, are you going to send the recording?
Yes, no, definitely. The recordings will be shared. The recordings will be shared with you.
Okay.
What I would do, I would upload them on our YouTube channel. We have a YouTube channel, but obviously the links, when I share them, it will only be strictly for you guys. You don't have to share them with unauthorized parties.
Okay. No, that's 100%.
All right.